Okay, so in this video, I want to kind of go over why somebody might use or consider using a structured settlement annuity. But first, I want to kind of go over high level what it actually is. And so before I do that, let me just say, so my background is as a certified financial planner, a CFP, as well as being a former attorney. Um, and I always tell people, look, a structured settlement annuity is a tool in the toolbox that I might use or that we might use for a mutual client, but it's definitely not the only tool. And so I always tell people, look, if you're working with a lot of people in the structured business, they're basically just insurance agents selling structured settlement annuities. And so I always caution people, look, be careful because they're not for everybody. I do think they're an amazing tool, but it doesn't fit for everybody. So first off, though, when you hear the word annuity, a lot of people, again, as a financial planner, we use what I'll call a retail annuity with a lot of our clients. Typically, these are going to be people getting ready to retire, or maybe they're already retired. This a structured settlement annuity is different from the type of annuity that you may hear advertised on TV, or if you've got a financial planner and they're talking about it, they are distinct. There's some different rules about them. They're very much different products. So I just want to say that as well. But all a structured annuity is it's a product created by life insurance companies, and it's a contractual agreement. And the agreement is basically you or the plaintiff saying, I'm going to give you the money that I got or that I'm receiving from the verdict or from the settlement. I'm going to give that to the life insurance company, and in exchange, they're going to make periodic payments or lump sum payments to me at a set time, and those payments are fixed. They cannot be changed, and the interest rate that I'm going to get on those payments or on that amount of money is set in stone as well. It's not going to fix. So really, all a structured settlement annuity it's a contract with a life insurance company, and typically these are, there's only roughly, let's say, a dozen life insurance companies who even do these, and these are typically going to be the larger companies, the larger life insurance companies. Think MetLife, Pacific Life, Prudential, something like that. So these are going to be typically the larger companies, but it's just a contract with them where they're guaranteeing a payment, they're guaranteeing a fixed interest rate, and that's it, okay? So why would someone actually use it? Well, the first reason typically, I guess I wouldn't say, in this specific order. Some people have different reasons, but one of the major reasons is it's tax-free. So in most jurisdictions, in most personal injury cases, let's just say that the amount that the client is going to receive is tax-free, right? So if you get a settlement and the client's going to get $500,000, well, that $500,000 is, I'll just say, almost always going to be tax-free to the recipient. So the plaintiff isn't going to pay tax on that $500,000. But if they came to me after the fact and they said, hey, Justin, I want to invest $500,000 with you, and we build them a portfolio and we put that in the stock market, well, they're going to pay taxes on whatever those gains are, and we would call those capital gains, right? So if, let's just say, that $500,000 now grew to $600,000, they're going to pay taxes on that gain of $100,000. But if you put it into a structured settlement annuity, and that same $500,000 gets you a benefit of $600,000, that gain of $100,000 is not taxable. So they're not going to pay the taxes on it. So that is a unique thing for structured settlement annuities. And this comes out of basically the IRS tax code that has some provisions in there specifically carved out for structured settlement annuities. So this is what kind of makes the structured settlement annuity different from the retail annuity. So if a client comes to me who's not getting money as a result of a personal injury case, and they say, hey, I want, tax-free money, well, the annuity that we would be able to sell them is not the same as the structured settlement annuity. So this is a unique feature to the structured settlement annuity, and it's a really big deal because what I'll typically tell people when we're doing an analysis of whether or not we should just invest the money in, let's just say generally the stock market versus using a structured settlement annuity, well, 90% of the time, I'm gonna say almost pretty much all the time, the interest and the growth in the stock market is gonna be higher than a fixed rate on a structured settlement annuity. However, when we do our analysis, I always say, look, let's say that the stock market, we're gonna say you're gonna get 8%, okay? But the structured settlement annuity, you're only gonna get 5%. But on that 8% in the stock market, you have to pay taxes, whereas with that 5% rate in the structure, you don't. So you end up getting more of an effective growth of, let's say, 6 to 6.5% on the structure. It's still going to be lower probably than the growth on the stock market, but still that's kind of an analysis that we want to do. So that's a really big piece of it, right? That's a really big piece of it. And some clients, they don't get it, especially if they've never really made money before and taxes aren't like a really big concern for them. But for a lot of clients, this is a really big concern and they understand it. The second thing, which I've kind of already mentioned, is that it's a fixed interest rate, right? So again, the rates change on a daily basis, but most of the time the rates are probably, depends on the terms, depends on when the client wants to receive their money. Generally speaking, the longer they leave it invested, the larger the rate it's going to be. But let's say that roughly most rates are going to be somewhere between 3% and 6%, somewhere in that range. Could be a little bit lower, could be a little bit higher, but that's kind of where the rates are going to be. And again, it's fixed. So if you're getting a 5% rate on the money that you're investing, that rate is not going to change. It's going to be 5%. It doesn't matter if we have another, 08 financial meltdown, your rate is going to be fixed. Whereas with the stock market, we know it goes up and down. You could be up 20%, you could be down 10%, right? And so for a lot of clients, that is a big thing, just because, again, depending on their financial literacy or depending on what we call their risk tolerance, they may or may not be able to handle the market volatility that's associated with the stock market. So this is a really big feature as well for a lot of people. They like to see, I know what I'm going to get, right? So that's a big one. The third is protection and stability, right? So this is a big one in the sense of it kind of protects them from themselves and from outside influences, and it gives them some predictability. And here's what I mean by that. When you have a structured settlement annuity, once the plan is designed, right? Meaning, let's say the client decides they want to get, making up a number, $1,000 every month for the next 20 years, and that's what they're going to get. Well, they can't change that. Now, in theory, they could sell it to one of these, loan sharks like, JG Wentworth or something like that, but we're going to advise them not to do that. So let's just say, for sake of example, that $1,000 a month, that's what they're going to get every single month for the next 20 years. Well, if they all of a sudden, a year in, they're like, you know what, I really want to get a Lamborghini, or I've got a cousin who's, telling me about a new business they're going to start and I want to invest in it. For better or for worse, and often it's for better, they can't all of a sudden say, you know what, I don't want the $1,000 a month. I want to just get a lump sum for $400,000 so I can invest that money with my cousin, or I can buy the Lambo or whatever it is. And so it's a really great way to protect clients from themselves. And a lot of clients get it. I mean, I would say, obviously you're going to have a lot of clients who we all know they're going to blow the money on day one. It's already been spent in their mind, right? From the time they hired you, they've been seeing these checks, these money symbols, and they're ready to spend the money. Well, with this, it really protects them from themselves, and a lot of clients appreciate that. And they also know, look, I know I'm going to have family members asking me for handout, for help, friends, etc. And so this protects that situation as well. But it's also predictable income. Again, if they are, let's say the accident is such that they're going to have really high medical bills. Well, we want to make sure that they've got steady, predictable income. And that's one of the things we do in our analysis of whether or not we should use a traditional, stock portfolio. Because let's say that they need the money and the stock market is down 10, 15%, right? And they're going to have to sell at a loss. Again, I'm not saying that's never the right answer, or it's not worth it. It's definitely something we would evaluate. But a lot of clients just like this, that they know, well, I know what my money's gonna be. I can plan for fixed expenses because maybe they're on a set income, right? Maybe they know what their income's gonna be, so they can very well plan out kind of the next couple of years or longer of their life. A lot of people like that. So that can be really helpful as well. Similar to that is, another benefit is no market risk. Again, this could be good, this could be bad, or some clients may like this, may not like this. Some people just can't stomach the volatility of the stock market. They just like to know what they're going to get. They want to see a little bit of growth, but they don't want to ride the ups and downs of, what happens when there's tariffs or wars or new industries, all this stuff that if you turn on any sort of news channel is always, very prevalent. They just want to know, hey, what am I going to get? I want to make sure my money goes up. I want to keep up with inflation, though they may not necessarily say that, but they get that things become more expensive as time goes on. And so this can be a great way to, kind of have the best of both, where they know what their money's going to be. They're going to get a little bit of growth, but they don't have to ride the waves of the market. And then the last thing I'd probably say is flexibility in design. So again, they get to decide when they want the money, how they want to receive it. So again, if it's a minor, if it's a child, the parents are going to have the flexibility to design it. But if it's an adult, they get to decide, depending on their age, when do they think they're going to need the money, and a whole host of factors. And we get to really design that. It can be very, very flexible. So I think, those are some of the main features. Again, not to say that structures are not without their flaws. I can make a lot of arguments of why they're not good in many situations, which is again why we have the wealth management company as well. And so we can offer that service. But I think it makes sense for a lot of people who, again, kind of using those things. They want that tax deferred money. They want some flexibility in designing things. They want to protect themselves from themselves or from family members or outside influences that might come in. They want to have that predictability. They don't want to really ride with the market and feel all those ups and downs. And they just, it gives them a sense of peace to kind of know what they have and when they're going to get it. So again, really great option for minors. It's a very good option, and it also makes sense for a lot of adults as well. So there you go, kind of a high level overview of who could benefit or who might be looking for structured settlement annuity, who it might work for. Feel free to reach out with any questions or be happy to help. Thanks.